We do think there is still room for the growth style of investing, of course, which focuses on companies that in the future can generate higher earnings growth. And some of those are still in the pre-profit stage. But what I think is different is for the past few years, there was no pressure on any of these growth companies to be profitable, right? Yeah. They were able to derive and generate a lot of capital in private markets and public markets and spend a lot of money just focusing on increasing customers, for example, without actually thinking about a plan on eventually becoming profitable. But now that's changed. Now investors are putting pressure on companies to have a path to profitability. It doesn't have to be right here, right now, but there needs to be a path 3 years from now, 4 years from now, for companies to become much more sustainable, positive earnings companies. And that's where there's a really exciting exercise and opportunity this year, which is to sift through some of those companies that sold off last year, the pre-profitable companies, and figure out which ones will never be profitable, but which ones are making the changes to eventually become profitable. And we saw that after the dot-com bubble burst, the companies that did the best were the ones that were already profitable. Okay, that makes sense. That already happened last year. Then the companies that were pre-profitable fell. But then what was interesting is to see what happened 3-4 years after that initial sell-off. The companies that eventually became profitable during this time frame recovered and joined the profitable companies in performance. But the ones that never became profitable never recovered again. And that's the turning point we're at again. And that requires a lot of active management and a lot of change from these companies, some of which we're seeing, right? We're hearing about layoffs. We're hearing about general cost cuts. They are trying to find a path to profitability now that investors are pressuring them to do that.
Yeah, and we've hit on another portfolio resolution there to sort of sift through that growth or tech wreckage to unearth, I guess, real value. So I guess my next question follows then, how can investors aim to identify value amidst that wreckage? Which company characteristics, perhaps we can start there, should we look out for? Should companies have a differentiated product? Should they be founder-led, possess a superior culture? Can we get a better understanding of the sorts of companies we should be looking out for?
So I do think you do start with valuations first, right? So, yeah. And specifically within the growth space, and some of them are still not profitable quite yet, we would be looking at valuation metrics like price to cash flow. That's still very, very important. So figure out if just the valuation has reset enough. And then when we think about the path to profitability, it's really important to think about, does this company have a really large and growing market? So is it a part of some kind of secular shift that's happening? And here it's really important to separate what happened during the pandemic versus what's an actual structural change that's going to continue over the next few years. And that's where I think we're discovering maybe not everyone's going to sit at home and order everything online and stream endless amount of content and spend all their time on social media. So maybe that got a little bit exaggerated. So think carefully about what are actual secular shifts and which companies have that large growing market. The second thing to think about is there a competitive advantage of that specific company? Because when there is a large growing market, you get a lot of companies that try to address that space. So which one has true competitive advantage? And then, of course, the third one is to think about whether there's a strong management team that can have strong execution on the plan. And that's especially the big focus now, is on whether companies are able to adapt to this environment and are able to cut costs or adapt business plans quickly enough to actually have a path to profitability or not. Or maybe it was just a flash in the pan.
Yeah, sure. And you mentioned secular shift then. To what extent can investors, I guess, overlay or incorporate some sort of thematic screening or approach to their security selection process, do you think?
I think themes are really important ways to think about investing, because sometimes a theme encompasses of course, multiple companies in multiple sectors, in multiple styles, right? And so just
Yeah.
thinking about do I like tech or not doesn't really fully capture some of the secular shifts.
No.
So a big secular shift is still this idea of hybrid work going forward, for example. Not quite to the extreme that we had gotten during the pandemic, but I think we can all agree that there's some room for a bit more hybrid work. So, for example, that encompasses opportunities in things like cloud adoption, right? Cloud type of companies, but it also encompasses a theme like cybersecurity, right? There's the need to protect all of our communication in this more digital kind of world. So that's one interesting secular shift. Of course, we can think about different ones unrelated to that idea. Digital adoption also necessitates, just in our every single day-to-day life, a lot of demand for things like semiconductors and all of the inputs into semiconductors, which includes commodities as well, like lithium and nickel and rare earths. Away from the tech space, of course, a big secular theme is the aging of the global population. That encompasses a lot of opportunities in terms of healthcare and healthcare services. Another interesting theme related to the energy space is the need to balance self-sufficiency and security on traditional energy with the continued push into renewable energy and everything that's necessitated for that to come to fruition. And then the last big secular theme I'd mention is really the emergence of the middle class, especially in Asian markets. That's a theme that's not done in China. It's a big theme for India and for Southeast Asia as well.